What up, y'all? Welcome back to the Hef Investors channel. I'm your host, Kino. You already know the vibes. We about to get into today's topic, but before we do, asking you to please like and subscribe down below. You know already. Show some support. Show some love. I'm bringing the game. I'm bringing gems to you. Today's topic is the 5 things that I've learned from trading Forex for 2 years consistently. Number 1, picking one pair, one session. The reason for picking one pair and one session in trading Forex is because it makes it easier to master the skill when you're only paying attention to one pair. It makes it easier to trade as well when you're only paying attention to one pair. So when I first got in the game, I was paying attention to everything. I had like 20 different pairs, just like, oh my god, I gotta watch this. Oh, this one is doing this. All right, I gotta. It's really hard to trade, especially my trading style, to trade that and be watching 20 different pairs at the same time. It's just not possible for me to pay attention to 20 pairs at a time, and for most people it's not possible. I mean, if you're a person that has already gained success and you trade 20 pairs, well, congratulations to you. But for the most part, it's not an easy task to do. So trading one pair is very important, and also knowing when that pair moves, when that pair is the most volatile. So I trade NAS 100 or US 30, and I trade them only in the New York session. The New York session starts around 8 o'clock to around 10:30, 11 o'clock is when it starts to kind of slow down. So that's the time that I'm around my computer to get in or out of trades. It's from 8 a.m. to 11 a.m. That is my trading time. So understanding when you are when your pair is the best time to trade. Like if you're going to trade GJ, you know that. Well, if you didn't know, the best times is to trade during London session. When your London session is probably around 2 to 4 a.m. That's Eastern Standard Time. Obviously, I'm talking New York time zone. If you live somewhere else, then the time zone could be different. The time could be different for trading GJ. But you need to learn. You need to know what time to trade that pair. When can you get the best moves out of a certain pair? Like you could trade GJ during New York session too. It still will move. But you have to make the conscious decision that I'm only going to trade during New York session for GJ, or I'm only going to trade London session for GU, or whatever the case is. I don't trade either pairs, but if that's what you chose to do, you have to find one pair, and when it trades the best. Number 2, knowing your trading style. Knowing your trading style means knowing yourself. Are you a patient person or an impatient person? I know for myself, I'm quite impatient. I'm from New York, so like, if you know anything about New Yorkers, we're not that patient. We walk fast, we do everything fast, we beep you as soon as the light turns green. Like literally, you'll get beeped if you don't move when the light turns green. So just naturally not being slow in our movements, I've become impatient at times. So I like to trade a faster pair, and I don't like to hold trades for too long. I probably hold trades for like couple minutes to, well, not couple minutes, I would say like a couple hours. Maybe the longest I would probably hold a trade is like 4 or 5 hours. That'll probably be the longest I'll hold a trade. So I'll go from like scalping to intraday trading, but I'm like right between there. But you need to know if you're a scalper, intraday trader, swing trader, Long-term hold, buying investor, you need to know that. Are you patient? Are you patient enough to hold a trade 2, 3, 4, 5, 6 days, maybe just one day? That will make you like a swing trader. But if you're not patient enough to hold for a couple days or a couple weeks, maybe you're an intraday trader. But even if you're not, like, you can't even hold a trade for 4 or 5 hours, maybe you're a scalper. But you need to figure that out. You need to figure that out based on your personality. Which one of those fit with you? Which trading style will work with your personality best? Because that's when you will find success. Because this trading style works with you. You can't be a scalper. Like, you can't be impatient like me and then be like, I'm gonna hold this one trade for 2 days. Like, I wish I could. It's super hard for me. If I'm seeing profits and I already got like a 2 to 1, 3 to 1, I'm leaving. I'm not holding. I can't. I'm leaving the trade. I'm not staying. I can't hold for days. Sorry. So knowing your trading style based on your personality, very important. Number 3, risk management. Very, very important to understand your risk management, because that's what is going to make or break you. You can have the best strategy in a loving world, but if your risk management is off, you won't be able to be successful with that strategy. Your risk management also has to be tailored to your trading style. So if you're a swing trader, maybe you're going for a bigger risk management. Maybe you're going for a bigger R to R, risk to reward ratio too. So you can maybe risk a little less for more because you're holding the trade for a longer time. But if you're a shorter time trader like me, you would probably risking more because you're only staying in the trade for so long, or quote unquote risk manage. You still risk manage, but you would risk according to your capital, obviously, but you would risk higher because you know you're not staying in that trade for long. 1, 2, because you maybe have the capital. 2, 3, because your risk to reward might be smaller. My risk to reward on most trades is 1 or 2. I mean 2 to 1. Sorry, 2 to 1. 3 to 1. I don't go past 3 to 1, to be honest with you. 3 to 1 is probably my maximum on a risk to reward basis. And if you're a scalper, you have to put size on that trade for it to like, if you're catching just 10-20 pips, you gotta put size on it because you're not gonna see that much. But if you're like a swing trader and you're catching 150 pips, you don't have to put that much size on it, because over the pip, over like the range that you're catching, the amount of pips you're catching, you're gonna make that up. So understanding your risk management is very key. Number 4, you have to understand your strategy as well. So before the risk management, all that type of stuff, you have to understand your strategy. Because if you don't understand your strategy, then your risk management doesn't matter. Well, it does kind of matter, because it's still going to save you a lot of money if you know that you're not risking a lot to gain a lot, or if you're not risking a lot more than the capital that you have. Like if you're probably taking a 1% risk on a day on your capital. I don't know how much capital you may have, $10,000 capital, and you only risk 1% daily. It's gonna take you 100 days to blow the whole account, which is probably not likely. Probably not likely. If you're only risking 1, you really have to just be closing your eyes and just press it or whatever to lose 100 days back to back to blow the account. That's pretty crazy. Understanding your strategy is very important. So you got to understand when your strategy works best, what it looks like when it's not working. So like when you understand your strategy, when a trade doesn't look good, you'll close it early. Like if you're sitting in drawdown and trade just doesn't look good, you'll close it early, because the whole name of the game is cut your losses quick, keep your winners running, or at least let them hit TP. If you could cut your losses quicker, you would save more money, but you just let your runners run to TP, or you just let them run. It just depends on what type of trader. If you're long-term trader, you just keep letting them run. But if you're short-term trader, just let them run to TP. But if your trade doesn't look good, like based on the back testing that you have done, on the trading strategy that you have, and it doesn't look good, you close, you cut your losses quickly. Not saying every trade that just goes in drawdown, you just close because you don't like being in drawdown. That's ridiculous. Losing is inevitable. It's a part of the game. Because sometimes, even like I can't stop the trade, I can't close the trade out earlier because it hasn't gotten to that point where it looks like it's not going to work out. Sometimes it's just straight. It like closes, it stops me out really fast. And that's happens sometimes. Losing is inevitable in this game. If you feel like you're gonna have 100% strike rate on your strategy, find something else to do, because it just doesn't exist. Find something else to do. Everyone loses. Institutionals loses. Banks loses money. Not saying they lose a whole bunch of money because they're still in business now. The only reason why we trade is because we're in business to make money, right? So they don't lose a whole bunch of money, but they still lose. They don't have 100% risk. They don't have 100% strategy that win all the time, right? So you're gonna take losses sometimes. It's inevitable. But back testing, understanding your strategy, understanding when you see that setup, you don't hesitate. You just boom, you take the trade. No hesitation. Don't go back, oh, let me reanalyze this. If you analyze it already and you plan this out, you know what zone, what area, where did you exactly want it to get in, and you see it coming to that area, take the trade. Don't go oh, let me draw this trend line and see the Fibonacci. You already did the work. Just take the trade, because now you missed the trade, or the trade hit your area and now it's pulling back out or going back up, wherever the case is. Now the risk to reward is you're losing, you're diminishing your risk to reward, because now your trade is going further and further away from your entry point that you should have taken that would have gave you the best risk to reward ratio. So you have to understand the strategy that you use, understand how it looks like, understand how it's supposed to set up, and understand how it looks when it's not going right. It's very important. Number 5, putting it all together, is creating a system that will put all of these other 4 components that I said all together. So that's picking one pair, 1 or 2 pairs. I'm not gonna be unfair. Like 1 to 2 pairs. Don't go crazy. 1 to 2 pairs at max. 1 session only. So this is your system. You're looking at 1 to 2 pairs in 1 session. You're knowing your trading style, because you know yourself. I'm a swing trader. I'm a short-term trader. I'm an intraday trader, right? This is a part of your system. So you know this, and then from that, all right, cool. This is how much I'm willing to risk a day. I'm willing to risk 1%, which is $50 of my account a day, or $100 or $10,000. It depends on your account size. I don't know that part. And then knowing your strategy. That in itself is the whole system that you put together that will elevate your trading to the next level. When you put all those things together and you just consistently do that system that you've created, that you picked one time frame, you picked one time zone that you're gonna trade, not time zone. You picked one session that you're gonna trade, 1 to 2 pairs that you're gonna trade. You know how much you're risking a day. You know how the strategy looks like. You know your risk to reward ratio. You know your win rate. You know all that stuff. And you put that all together, now you have your system that you stick to, that you consistently go at. And in over 20, 40 trades, you will be profitable. And don't deviate. So stick to the rules that you put together in your system. Be consistent, and over a period of time, you'll see that you're getting better and better and better. And just keep pushing yourself, keep pushing yourself, keep pushing yourself. You're gonna get there eventually. It's your boy Kino. Till next time, y'all. Take care.